In the previous video, we discussed why India has two major benchmark indices, that is Sensex and Nifty. We understood how both indices represents the Indian stock market from slightly different angles. However, there is a question for you. If Sensex and Nifty already tells us how the market is performing, then why do Indian financial markets have more than 100 indices? In fact, if we include all variants maintained by NSE and BSE, the number runs into several hundreds. So why we need so many? Let's find it out. Imagine a student scores 85% marks. Is that enough information? Not really. We would also want to know his scores with respect to different subjects like maths, science, English, history, etc. The overall percentage tells us the result. The individual subjects tells us the details. Similarly, Sensex and Nifty tells us how the overall market performed. However, other indices tells us how specific parts of that market performed. Let's imagine two situations, wherein situation 1, banking stocks are booming, and on contrary, situation 2, IT stocks are struggling. Now suppose both movements cancel out each other, then overall Nifty may hardly move. Looking only at Nifty, you might think nothing happened today. However, under the surface, a lot of things happened. One sector was celebrating, another was suffering. That's why exchange create specialized indices. At this point, you might be wondering why create so many indices. The answer is simple. Different investors have different objectives. Some investors want exposure to different sectors or themes, including banking, IT, defense, etc. Some investors focus on regular dividend income. Some investors focus on low volatile stocks. Some investors focus on growth. One index cannot satisfy everyone. Therefore, exchanges create different indices for different purpose. Most people think indices only measure the markets. However, that's only half the story. Many indices eventually become index funds, ETFs, or benchmarking tools. In the other words, they don't just track the markets, they also become investment products. So the next time if someone says the market is up today or the market is down today, then they are addressing the broader markets, the broader indices which are Sensex and Nifty. So the next time someone says the market is up today, ask a simple question. Which market? The overall market represented by Sensex and Nifty, or the banking sector, the IT sector, the pharmaceutical sector, the mid cap universe, the defense theme, or some other corner of the economy. Because when most people say the market, they are usually referring to the broader market and broader indices which are Sensex and Nifty. However, if you want to dig deeper and truly understand what is happening beneath the surface, you need to look beyond these benchmark indices. That's where the world of sectoral, thematic, market cap, strategy, and volatility indices begins. Sensex and Nifty may tell you the headline, the other indices tell you the full story. And that's exactly we will explore in the upcoming videos. If you think that this video was useful and you have learned something today, then